Welcome to Short View Trading, it's your morning market hit for Monday, 14th of February. What matters today and this week for traders? Well, it's Valentine's Day today, and in market terms, it certainly feels like it might well turn out to be one of those Valentine's Day massacre type equity market environments. On the back end of last week, Thursday and Friday, markets really struggled. Once again, as the time of recording this video, markets are struggling this morning, off down about 0.8% on the S&P 500 futures, early morning London time. But there's really two things going on in markets, two key drivers of this weakness over the course of recent weeks. One, of course, is the Russian-Ukrainian geopolitical tensions that we're seeing play out on the border there, the amassing of troops, the toing and froing in diplomatic terms, and the impact all of that's having on the oil price. Up 1% overnight, once again on Brent, now up $17 from where it was just at the end of last year, 31st of December 2021, 20% higher in those past 6 weeks. And no wonder that's causing challenges for equity markets. That is one key theme, watching that growing tension on that border, wondering what will happen next. The second key theme, of course, which is equally as important, if not more important, is the rising interest rate expectations. The rising expectations for rate hikes over coming weeks as the inflation data comes in worse than expected and the market keeps pricing in more and more hikes in 2022 and beyond. That was reinforced by last week's US consumer price inflation data and record levels on headline and core, both their highest since numbers in 1982. As you can see in the chart in front of you now, dramatic numbers, dramatically high inflation, and there's lots of inflation data out this week that we'll come to in a sec that'll be the focus of markets' attention. So those two key themes are driving markets, but what we also see is this wonderful three-wave pattern, this classic sell-off pattern. Wave one of selling down to the lows on January the 24th, as you can see on the Fibonacci chart we're putting in front of you now. Then a wonderful rally in wave two, the relief rally, the wave two relief rally, all the way back to that classic Fibonacci golden ratio, 61.8% retracement level, as you can see on the chart, at which point it failed after testing that the second time, and then we began the wave three that we're in at this very moment. So far this is playing out like a classic pullback, a classic three waves. We're in the third wave, and the key question now is when should we be closing shorts? And of course the first key input into that is how do the short-term market timing models look? And many of them have moved off from their sell signals, they're moving lower, but they're certainly not on buy as of yet. And these, just to remind you, are 1 to 2 week market timing models. So in front of you now, you can see the short-term technical scoring system where we aggregate a whole bunch of technical models, add up their signal, equally weight all those inputs, and come up with a scoring system you see in front of you now. It's been working well, as you can see in recent weeks, but it's certainly not on buy. It's off its sell levels, neutral but not on buy. It's not yet signaling the end of wave three. And of course what we do in our daily rag is we update all our key market timing models. We publish them with our view on where markets should go from here. And if you're interested in seeing that, please do click on the link below for a free trial. If you're a subscriber, it's available through the website. So what are we watching today and this week? Well, there's an awful lot going on. Firstly, of course, the price action in response to the rising geopolitical tensions and any meetings in relation to that in the geopolitical terms. Chancellor Olaf Scholz from Germany is meeting with Putin on Tuesday. There's a meeting in New York of the UN Security Council. There's a Munich Security Conference on Friday. Lots of geopolitical speakers and important leading politicians speaking across all those events. They'll be watched closely by markets, along with the oil price, to gauge the reaction of the market to any comments they make. That's one theme. Second theme is, of course, lots of inflation data coming out this week from China, the UK, Japan, Canada. All got consumer price inflation in the middle of this week. That's a big theme in markets. Watching those will be important, and the way markets react, as will the Fed minutes, which come out later this week on Wednesday. On top of that, there's a housing theme this week with lots of US housing data coming out, including starts and permits. Added to which, it's also the G20 central bankers and finance ministers meeting at the back end of this week as well. So plenty for markets to focus on over the course of this week. So that's it from us. That's your morning market hit for Monday, 14th of February. Thank you for listening. Please do subscribe to these videos on YouTube. Simply search under Short View Trading and click on the subscribe button, or follow us on LinkedIn, Twitter, and or Facebook. Thank you for listening. Stay safe. Trade well.